Hey everyone, welcome back to Corporate Decoder. Today, YHNA Acquisition I Limited just filed an 8K about a Nasdaq delisting warning, and I am seeing why this is a big deal for shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is facing serious trouble with Nasdaq rules and needs to turn things around fast, or it could be goodbye to the exchange. We are looking at YHNA Acquisition. I Limited the company behind the ticker YHNA. They are what is known as a shell company, which means they typically exist to acquire another company. This filing is an 8K report for significant events that happen between regular financial reporting. What is significant here is that YHNA Acquisition I Limited received notice from the Nasdaq stock market that they are not meeting the requirements to stay listed. This is serious business for any publicly traded company. Nasdaq has two main concerns for YHNA Acquisition I Limited. The first is about the market value of publicly held shares, or MVPHS. This is basically the total value of all the company's stock that is owned by the public, not insiders. Nasdaq requires this to be at least $15 million to stay listed on the Nasdaq global market. YHNA Acquisition I Limited failed to meet this requirement for 30 consecutive business days from the 5th of March to the 16th of April 2026. This is concerning because it suggests that not many people are trading or valuing the company's publicly available shares highly enough. Even though they got this notice, their shares will continue to trade for now. The second issue Nasdaq has is with the market value of listed securities, or MVLs. This requirement is much higher at $50 million. Again, YHNA Acquisition I Limited has not met this figure for the same 30 business day period. This means the total value of all the company's listed stock is currently below Nasdaq's threshold. This combined failure indicates a significant problem with the company's market valuation and investor interest. So what happens now? YHNA Acquisition I Limited has 180 days, which is about 6 months, to fix these problems. That gives them until the 14th of October 2026. To get back into compliance, they need to have the MVPHS be at least $15 million for 10 straight business days, and the MVLS needs to be at least $50 million for 10 straight business days. If they can't do this, Nasdaq will start the process of delisting their shares. There is another option though. The company could try to move their listing to the Nasdaq capital market. This market has lower listing requirements, giving them a bit of breathing room. However, they would need to apply and prove they meet those specific requirements for the capital market. This is a common move for companies facing delisting from the main Nasdaq market, but it also typically signals a lower tier of listing. Looking at external information, YHNA Acquisition I Limited is actually a special purpose acquisition company, or SPAC. These companies are formed to raise capital through an initial public offering to buy an existing company and take it public. Recent news from December 2025 and March 2026 shows they were extending deadlines for a business combination and even had to make a deposit. This suggests they have been struggling to find a suitable company to merge with, which could explain the low market valuation. We also see from news in April 2026 that a Nasdaq warning was already anticipated. Their listed securities include these units, each made up of one ordinary share and one right to receive a part of another share. They also have the ordinary shares traded under YHNA and the rights under YHNA. All of these are listed on the Nasdaq Stock Market LLC. The fact that all these components are struggling to meet listing requirements emphasizes the broadness of the problem. The company also checked a box indicating they are an emerging growth company. This means they are able to comply with new accounting standards a bit later than larger companies. While this designation offers some flexibility, it does not exempt them from core listing rules like market value. What does this all mean for YHNA Acquisition I Limited and its shareholders? The company is in a race against time to boost its market value significantly. This often requires a successful business combination or a substantial increase in investor confidence. Without a merger or a significant positive market shift, it is hard to see them regaining compliance on their own. The delisting risk is very real. The biggest concern here is the lack of market value. It is not just one metric failing, it is two key metrics related to the overall valuation of the company's shares. This suggests a fundamental problem in investor perception or the company's ability to execute its business plan as a SPAC. A transfer to the Nasdaq capital market is a possibility, but it is a step down and not a guarantee of long-term success. The risk I am watching is whether they can actually finalize a merger before the October deadline. If they don't find a target, or if the market does not respond positively to any potential merger announcement, the path to delisting looks increasingly likely. Alright, that is my take on this filing. What are your thoughts on YHNA Acquisition I Limited situation? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more. You can also join our Discord community for further discussion. The link is in the description. That is my take. Stay decoded. Like and subscribe and join our Discord community, all linked in the description below.